Ladies and gentlemen, do not keep all of your money in the bank. I know this may not come as a surprise to many, but for some of you who don't understand how banking and investing works, I want to break this down for you today so you can make better financial decisions. Before that, what's up, y'all? I'm Prince Donnell, founder of the Jumping Jack Tax franchise, and welcome to my page. We're currently at 95,000 subscribers. It's been a long journey thus far over these past 6 months since fully going into this YouTube channel and providing you with so much education and knowledge. Thank you for following me across this time. And for those of you that are not subscribed, please subscribe. Please watch back all of the previous videos and the knowledge that we give on taxes, LLCs, S-corps, the bank accounts that you're going to need, different financial topics around taxes and life insurance. And with that, owning a franchise, a tax franchise, if you need taxes done, personal and business, life insurance, bookkeeping, tax planning. If you need any of these services, we can assist you. One of our financial professionals can help. Text info to 267-792-0185. Again, info to 267-792-0185. With that said, let's jump right into it. Don't keep all of your money in the bank. Few reasons why I say this, but I want to start off by giving you guys a little bit of history about me. I've worked in banking since I was 18 years old. I started off at a small bank called Republic Bank. That's where I got my first experience in banking. I started off as a bank teller. For those that don't know, I know how to count cash really fast because I used to have to do it at the bank as a teller. And from a bank teller, I moved over to TD Bank, where I became a banker, where I'm opening up bank accounts, talking to clients about credit cards and et cetera. And then I actually became a financial services representative, what's called an FSR, and I actually got licensed. And I got my life accident and health insurance license, where I was selling life insurance through the bank and annuities. For those that didn't know that banks offer life insurance and annuities, absolutely, it's a huge driver of their profitability. They just don't market it to the public because what's being marketed to you is a checking account, a free checking account that you walk into, open this free checking account up, and then the profitability begins from there after you deposit your money, which we'll talk about in a second. But my job also was to offer additional services to you after you open up your account where, hey, you know, life insurance, annuities, and different things depending upon the amount of money that you had inside of the bank. Right. And then from TD Bank, I moved over to Wells Fargo, where I did the same thing, had my license, and I was talking to customers about different investment options and insurance and annuities and et cetera, before I actually moved into entrepreneurship and now starting a franchise here with Jumping Jack Tax. So with that, I've seen a lot on the banking side. And I think it's important that you understand some of the history of what happens when you actually put your money into the bank. And the reason why I say don't keep all of your cash in the bank is because of the fact that, for one, and I want all of you guys to look this up, is that there's a certain thing called fractional reserve banking, okay? And what fractional reserve banking is basically a bank is required to keep a certain percentage of your deposits and savings. They're only required to keep a certain percentage of that on hand. At the time, that was 10%. So just to break it down, if you were to give the bank $10,000 in cash, your money, and you gave it to the bank, they're only required to keep $1,000 on hand, 10%. The other 9,000, aka 90% of that money, they are now reinvesting that money into providing loans, real estate loans, commercial and consumer loans, and they may even be investing into projects that you don't even agree with, that aren't even a part of your beliefs, but you have no say because of the fact that you gave the money to the bank to allow them the opportunity to do whatever they would like to do with the money so that they can make profit. And in return, they'll give you a very, 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 very small percentage of the profit that they made from the money that you lent to them. Okay, so we got to understand that concept before you get an understanding of why putting your money, all of your money into the bank is not a smart thing. Fractional reserve banking. And just so you guys also know, the Federal Reserve, during the pandemic, they actually dropped that reserve from 10% to 0. So technically speaking, as of today, as we're talking about this is 2021, if you were to give $10,000 to the bank, they're technically not required to keep any of that cash on hand. Now, I know what you're probably saying, well, Don, but when I look into my online banking, I see the money there and that's available. That's called digital currency. So that number that you see in your online banking, that's digital. That's the liability that the bank has to you if you ever decide to pull out your cash. It's a liability, right? If you had 10,000 in the bank and let's say 15, 20,000 other people had 10,000 in the bank. Let's say everybody decided to come together and say, hey, we all want to withdraw our cash from this very specific bank at the same time. It would make the bank collapse, because they don't have all of that cash on hand. It's invested. All of the banks that are being opened, the staff, the marble floors, that's where your money's going. Okay, when you leave all that cash in the bank and you're getting close to nothing, if not zero, because they're marketing to you that you can open up a free checking account, right? Hey, get a savings account with 0.01% interest, right? But your money is completely safe. Let's switch that mindset here. And this is the point of this video. Switch your mindset from the fact that banks are the safest thing in the world, because there are a ton of other opportunities that are out there that are just as safe, if not safer, that you can put your money into and get a much higher return. It's important to note that you're not going to be able to grow you're not going to be able to grow your wealth, your net worth, unless you're actually, number one, producing more money than inflation, right? So if inflation is coming around 3 to 4% a year, you actually have to be netting 5 or higher just to beat inflation, which is like an invisible tax, just to beat the inflation so that you can actually be earning income. And for those who don't know what inflation is, just to go back and break it down, inflation is the cost of products and services and goods and cost of living, et cetera. That's increasing every single year. It's an invisible tax that increases the cost. You ever noticed how a bag of chips was 50 cents and now the bag of chips is now $1, right? That's inflation. That goes up over time naturally. And if your money is not actually increasing with inflation, then you'll have the same 10,000, but it may only be worth $9,800 in purchasing power. So you're technically losing money in real world value, but you have the same dollar on paper, right? But real world value, it's not the same. So we have to switch our mindsets around that if we want to be able to grow. We have to become the bank. We have to become the bank. Now, that's the point of this video. The goal is for you to become the bank and not keep all of your money in the bank when they're not doing anything for you. They're lending it out to people who are using these opportunities to make more money. Your goal should be to use the bank for what it's for. I should have 3 to 6 months minimum of emergency expenses saved, and I'll have that sitting inside of the bank because I don't plan to ever do anything with that money. I need it for worst case scenarios, which I'm a big believer in having a reserve. The same way that the bank was supposed to keep 10% of your money in a reserve if you ever needed the funds, the same way that you should be keeping a certain percentage of your money on a reserve, on hand, in cash, and available to you at any time if you ever need it. That's what you're using that bank for, right? And if you have a phenomenal credit, then you could also use the bank for leverage as lending opportunities if you decide to take that route. But you should only be using a bank for what you absolutely need it for, which is emergency funding, right? Now, as we move forward, how do you actually become the bank, which is the real solution here? Well, first thing first, banks know where their money is going. They know where their money is flowing. They audit their money. When I worked at the bank as a teller, I had to audit my drawer every day. And if I was even under a penny, I could almost lose my job. They needed to know where every single dollar was going every second of the day. So starting with number one, if you want to become your own bank, you need to audit your finances on a daily basis. The same way that as a bank teller, I had to audit my drawer at the end of every day to make sure it balanced. You need to be auditing your finances every day to ensure that it balances. Do you know where your money is going? Do you know what's on your bank statements? Do you know how much you're spending in food and in gas and entertainment and rent? Do you have these percentages broken down? Because if you don't, you're not operating like a bank. You're just allowing your money to free flow and for everybody to profit off of you. And you're never going to be able to move forward if you don't have a clear plan set forth for how you want to have your finances and what percentages that you're going to be spending in each category. So step number one, the most basic thing to do is sit down tonight, audit your finances and say, okay, where is my money going? And start making tweaks so that you can now start cutting costs so you can keep more money to you, more money that you need for opportunity. Now that we are now auditing ourselves and we're treating ourselves like a bank in auditing, right? Step number two is you need to learn the basics of investing, right? We know if we just talked about this earlier, we know that banks are using 90% of your money. Well, 100% as of today, 90 to 100% of your money, and they're reinvesting your money and they're putting it out into opportunities so that they can earn profit. You got to be doing the same thing with your money as well. So you need to learn the basics of investing. Now, how can you learn the basics of investing? Well, there are two different ways, two ways that I learned. Number one, reading. Reading is fundamental. That is going to be the first step for you to build a solid foundation. Two books that I would suggest, Rich Dad, Poor Dad, and Money Master the Game by Tony Robbins. Rich Dad, Poor Dad by Robert Kiyosaki, Money Master the Game by Tony Robbins. These two books have created a solid foundation for me amongst other books, but they taught me the basics of how money flows, the basics of investing and why it's important. And through you doing that reading, you're going to be able to enhance your knowledge and your comfortability around investing so that you understand that it's not a scary thing. That I word is not scary. It's only scary to people who read the news and a lot of the propaganda that's given to you about how people invest their money and they lose so much money and everybody goes bankrupt, right? That's not the case for a large majority of people who understand what they're doing. The same way that at your job, you know exactly what your task is, you know the process, you know the procedure, but when you first got to the job, you didn't know anything. It was scary. But as you started to understand and know it, you were like, oh, I know what I'm doing. You're now able to just clock in and just do your job, clock right out. Same thing with investing. Imagine if you had the ability to clock into your investing job, right? And then you're going in, you're doing what you need to do, putting it into the right opportunities, and then you clock out. Same thing, but it takes time for you to learn your process. So start reading from some of the greats. And the next thing beyond that is, after you understand the solid foundation of investing, the next thing is start getting your feet wet. There's no better way to understand how to invest your money without actually investing your money. You got to start putting it into opportunities and you need to start seeing how the market works. So one of my favorite investors is Ian Dunlap, the master investor. Y'all should follow him on Instagram. He says something very profound. You should not even start trading in the market until you made like a few thousand paper trades, meaning that you're just going into you're going into your brokerage account and you're doing dummy trades with paper money and you're moving with scenarios so that you can get a better understanding of how investing works. You can learn from your mistakes without actually losing real money, and you can learn from your successes and you're able to develop a process. Remember what we talked about, right? The same way that you clock into your job and you had to learn that process now to where you feel comfortable at your gig of clocking in and clocking out and doing your job to the best of its ability. You should treat it the same way with investing, right? That first 2-3 week month trial period, paper trading and learning your process. So then when it's time to go live and you're putting real money into it, now you're able to make better decisions because you learned from the mistakes when you were in the training phase. So I thought that was phenomenal, what he's teaching there around practicing first before you actually go live. But that's important, and you have to actually get your feet wet. You have to start investing because, listen, we know that the banks are not going to do it for you. The banks will give you 0.01% in interest, and that's important. So those three things in themselves are going to help you to grow further than where you currently are today, right? And by understanding how the banks work, you're able to create a better scenario for you and your money. More importantly as well, here's just another hack, and this is not something that I'll elaborate on in the video, is that, I don't even use debit cards anymore. I don't use debit cards. I only use credit cards. I have the cash necessary to be able to pay my credit card immediately, but I use credit cards. And why? Because the credit cards provide me with reward points. The credit cards provide me with cash back. These are all things your debit card are not doing for you. So by using my credit card, getting rewards, which are going to give me free amenities, and then also getting cash back, which I was able to just get cash back for like $2,000 that I was able to pay, to literally pay down my actual credit card from the cash that I received back from all my purchases. Yo, I'm basically getting purchases for free now. You can't do that with a debit card. So there's so many downsides to that. So the point of this video was use the bank for what it's supposed to be used for, emergency purposes, and if I ever need the funds for whatever reason. But all of my money outside of that point should be going towards aggressively investing my money and having a percentage of that, also paying down debt if necessary. But I need to be aggressively growing my money if I want to increase my net worth. And I need to continue to keep buying assets the same way that the bank is buying those assets with your money, without your permission, without your approval. Well, technically you did give permission and approval when you opened up the account, but in your sense, without permission, without approval, and into things that you don't even agree with. So do not keep all of your money in the bank, ladies and gentlemen. Only what you need. Invest the rest, pay down some debt with the rest, and start living free. With that said, again, Prince Donnell, I'm the founder of Jumping Jack Tax Franchise. Stay tuned for the next video as we keep breaking down financial topics. Again, if you need any of the financial services that I talked about, from taxes, life insurance, bookkeeping, tax planning, and etc., text info to 267-792-0185. And also watch some of the previous videos as well, where we talked about LLC versus S Corp, the 5 bank accounts you need to open up your LLC, what the things you don't know about an LLC, how to pay yourself, so many different videos and so much knowledge and information. Please plug in. This information is free. And I'll see you on the next video. Peace.